Hello and welcome to Investment Yogi. I'm Ishwari Bose Bhattacharya and today I'm going to tell you a story. Once upon a time in a land far, far away. Who am I kidding? This is definitely not a fairy tale. Though come to think of it, it is about people trying to convert an ugly frog into a handsome prince. Except in this story, the prince really is an ugly frog and the princess ends up crying. Yes, I am talking about the subprime crisis in faraway USA. Why should it matter to you? Well, because India truly is a part of the global economy, and what affects the US market and economy affects us too. A lot. So, what exactly subprime and how did it become a crisis? Well, it all begins with our ugly frog, the subprime loan. There was a time that home loans in the US were only given to borrowers with adequate incomes and large down payments. These are essentially the prime type of borrowers. However, this limited the number of potential home buyers, which meant less business for everybody. More money could be made by lending to low-income, high-risk borrowers at higher rates. This would make everybody happy. People with lower incomes could buy their dream home, mortgage brokers would get more commission, and mortgage companies would sell more of their product. This is how the subprime loan was born. Mortgage companies also quickly learned that they could sell this collection of risky debt to wholesale lenders and big banks. This gave them more money to keep lending to even more subprime borrowers and creating more risky debt. Meanwhile, these big banks and wholesale lenders took these bundles of bad debt, repackaged them, and sold them to investment banks. The investment banks further disguised these loans by creating funky products like mortgage-backed securities and collateralized debt obligations, which are then sold to institutional investors like pension funds and hedge funds. Well, so far so good. More subprime loans, more money, more deals, more money. More money, more money. So where is the crisis? Well, this whole picture appeared rosy as long as the housing market was growing. In 2006, the US housing market started falling. Once the market started falling, those subprime borrowers started defaulting on their payments. A downward spiral began. As more borrowers defaulted, house prices fell further, and more people defaulted. Basically, this big pyramid of fancy products built on a weak foundation of risky loans came crashing down. Several Wall Street firms have had to take big losses due to their exposure to subprime loans, and the bleeding still hasn't stopped. The final impact of subprime losses has yet to be realized as the world awaits with bated breath the fate of the US economy. Thus was our fairy tale turned into a scary tale.